Hopes of easing tariff tensions lift stocks amid steady domestic inflows into mutual funds. IT, auto notch gains while realty and FMCG are soft. The stock of Grow owner Billion Brains Garage Ventures scales to 120 rupees post-listing, which is a 20% premium to its offer price of 100 rupees in a promising debut. BSE's strong second quarter show also helps fire up capital market names. Tata Motors relists at a hefty premium to its implied price after the demerger of the passenger vehicles business. Tata Motors now only houses the commercial vehicles business of the Tata Group. Sir Dorabji Tata Trust inducts Noel Tata's son Neville Tata on the board along with group veteran Bhaskar Bhatt. Noel Tata will be the only permanent trustee, while Vice Chair Venu Srinivasan shall have a 3-year term in keeping with revised regulations. And a CNBC TV18 poll sees CPI inflation for October at a record low of 0.25%. Food CPI is also seen at a negative 4%, marking the 5th straight month of deflation. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormus Fatakia. Well, if you are a bull, this is the screen that you should be very happy looking at. It's a double 100 for the Nifty, well above the mark of 25,900 now, and in the last 3 sessions the Nifty is now up exactly 420 points. So good going for the benchmark index, and what has been leading the charge over the last 3 sessions has been the IT names. The Nifty IT index was up 1% in yesterday's session as well. It has extended those gains in today's session, is now up 2%, and that is after Donald Trump's remarks on the H-1B visa regulations, and whether it be large cap IT or mid cap IT. Both of those segments are seeing very healthy gains in today's session. Be it Tech Mahindra, TCS, Infosys, LTI, Mindtree, all of them are seeing very, very healthy gains in today's session. Tech Mahindra at the highest point of the day, as is LTI, Mindtree, both of them trading with gains of 3.25%, and TCS too among the top contributors to the Nifty gains. And of course, there are a lot of other reactions that you need to watch out for when it comes to earnings, with Asian Paints and Tata Steel also reporting results later in the day. But the other big story of the morning was the listing of the shares of the demerged commercial vehicles business of Tata Motors, and they listed on the bourses today. The demerged entity began trading as Tata Motors as 335 rupees a share, which is a 28% premium to its pre-open discovery price, which was at 260 rupees. And the stock has come off slightly from those levels. Earlier, we spoke to Girish Wagh, the executive director of the company, to understand their plans after the listing.
Listing as a separate entity gives us now sharper strategic focus, freedom to look at opportunities which are tailor-made for the commercial vehicle business. And looking ahead, we will keep on exploring opportunities which are close to the commercial vehicle and the logistics business. If I may also add, in the past few years, we have driven some strategic shifts in the company which have led to good results in terms of strong margin growth, robust free cash flows, and high return on capital employed.
And the other stock that listed on the bourses today was Billion Brains Garage Ventures, the parent company of the stock market trading platform Grow, and it was a strong debut on the bourses today. The stock now 22% higher compared to its issue price of 100 rupees. The IPO saw overall subscription of 17.5 times, with investors placing bids for 641 crore shares in comparison to the 36.5 crore shares on offer. The stock listed at a 12% premium to its issue price of 100 rupees on the NSE. And the big story, of course, taking forward that point from Grow's listing, and that has had a bit of a rub-off effect on the other capital market names as well, be it NSDL, be it CDSL, and of course, the other big factor has been the results from BSE. So Sudarshan is here to break that down for us with regards to the capital market names. Sudarshan.
So all the capital market names are high in today's trade, and one reason you have talked about is the gross listing. It had listed with a premium of 12% against the issue price, and now it's up almost 20 to 21%. Now what's going forward? So currently company's brokerage part forms almost 83% of its total revenue, and MTF forms just 2 to 3% of total revenue. Now going forward, company is saying that brokerage part contribution will come down and MTF part contribution will increase, and in near to medium term that part will increase in the range of 12 to 13%. So that's about growth. Second catalyst for today's capital marketplace move is BSE's Q2 results. But before I talk about the Q2 results, in the last 2 to 3 months, two topics that have been the focus points for BSE. One was about the change in the expiry day, which was changed from Tuesday to Thursday. And there was an expectation that once the day changes, there would be a downtick in the turnover. But fortunately or surprisingly, on the very first day when the day had changed, it had recorded the highest ever single day turnover on the expiry day, and that turnover was around rupees 50,000 crore. Regarding the weekly expiry, there has been a question, will the weekly expiry stay or go? Now recently we had comment from both Finance Minister and SEBI Chairman that anything that related to weekly expiry comes out will happen only after detailed consultation, and that day also we had seen stock moving almost 10% higher. And today there is another reason, that's the earnings for Q2 FY26 were result, and operationally those earnings looked very strong. On the operating part, revenue has increased almost 11% on a sequential basis, and transactional charges, which forms the major part of BSE, that also saw a healthy increase. Margins saw a minor contraction, but mainly it was because of increased regulatory charges. As far as earnings are concerned, it was a healthy set.
Healthy set indeed. Sudarshan, thank you for that update. Now on to the latest in the Jayaprakash Associates matter. Voting is currently underway on all 5 resolution plans submitted for the debt-laden company, with proposals from Vedanta Group, Adani Group, Dalmia Bharat Group, among a lot of others. Ritu brings us more details on this. Ritu.
Well, voting is officially underway on 5 competing resolution plans to acquire Jayaprakash Associates, and in the fray, as we've been reporting, are some of India's biggest corporates: Vedanta Group, Adani Group, Dalmia Bharat, Jindal Power and PNC Infotech. This voting window, we understand, stays open until the 20th of November. All the sources indicate the Committee of Creditors, which is led by the National Asset Reconstruction Company, could extend the window if they need more time to weigh the offers. Now, in terms of what is on the table finally, Vedanta Group has made the highest offer in absolute terms, pegged at around 16,000 crores as we had reported previously, and that includes about 3,770 crore rupees as upfront payment, 13,000 crores to be payable in 5 years' time. Adani Group, on the other hand, has submitted a proposal of about 13,500 crores, but with a much larger upfront payment of 6,005 crore rupees and another 6,700 odd crores payable after 2 years. In net present value terms, Vedanta's offer works out around 12,505 crores, just a notch above Adani's 12,050 crore rupees. Now, while Vedanta's offer is the highest on paper, Adani's larger upfront payment could make it more appealing to lenders. Now, before voting began, there was even a challenger round where only Vedanta and Adani had participated. Nonetheless, all the remaining bids, which are smaller, are also being considered. Dalmia Bharat has offered about 11,600 crores, PNC Infotech around 11,500 crores, and Jindal Power close to 6,700 crore rupees. Remember, JP Associates is before the insolvency court with admitted claims of more than 57,000 crore rupees, and it has been a high-stakes contest largely between two corporate heavyweights, Vedanta and Adani Group, and hopefully by the end of the month we'll have some clarity on who emerges as the winner.
Ritu, thank you for that update. The other big event later this evening is the October CPI number, and the CNBC TV18 poll sees it at 0.25% compared to 1.54 in September and well over 6% in the same month last year. This is the lowest reading after the new series of the CPI was created in 2013. Lata has more on what to expect and why. Lata.
Well, actually, ridiculous number, isn't it? Who would believe inflation is 0.25%? It is as low as that, and food CPI is actually minus 4% compared to last year. That's our poll saying. And if it does come at minus 4 or whatever, it would be the 5th consecutive month when food prices in year-on-year terms as a whole are lower than what they were last year. Actually, this whole 0.25 headline inflation, minus 4 food inflation is all because of a very high base. Last year, same time, potatoes, onions, tomatoes, not same time, more in October. All these were, ruling at 100 rupees. You're getting tomatoes at over 100 rupees and stuff like that. So it's the base effect that's making things ridiculously low at this point in time. But regardless, food inflation is going to remain negative for the next 2 months also, again, because of the high base. And economists are now veering around to the view that for the full year, the average inflation will be 2% or maybe 2.1. That's the number I got in the poll. RBI is still standing at 2.6. So all these numbers are going to confront the RBI in the next monetary policy meeting on December 6th. They're going to have behind them a 0.25% inflation and the fact that the whole street is standing at 2% for the full year. What is their mandate? To keep inflation between 2 and 6%. So if the average is going to be 2, then, the Reserve Bank is almost going to be forced to cut. Can you be so sure of the cut? No. Because on November 28th, we are getting the GDP number. GDP number for the July, August, September quarter may well come at 7.5% or thereabouts. Then even if there is space for a cut, is there a need for a cut? And better still, if the trade deal is signed, then the economy takes, a kind of a sentimental step up. So no one's of the view that there is a guaranteed rate cut in December.
To cut or not to cut, the question always on the street, isn't it, Lata? Thank you for that update. By the way, the Nifty Midcap Index is now at a record high. It was supposed to be 60925. It has crossed that level on an intraday basis. So while the Nifty is nearing towards 26,000, the Midcap Index has hit a record high of its own. Well, some of the top gainers on a year-to-date basis, L&T Finance is the top gainer on the Midcap Index this time around on a year-to-date basis, up 120% this year. Aditya Birla Capital, Godfrey Phillips, Indian Bank, all of them have had a very good year so far among the mid-cap index. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, India is waiting for a response from the Trump administration on the trade deal. Sources have told CNBC TV18 that a fresh round of talks between the two nations is not needed at this stage. Abhimanyu is here with more details on this.
Government sources have indicated that India is awaiting the American response on the BTA talks which have already taken place between both the sides, and there is no need for a fresh round of negotiations. Sources further added that several issues across various sectors have already been discussed threadbare between both the sides as part of discussions for a bilateral trade agreement, for which they had earlier indicated plans to conclude the first tranche by October or November of this year. Sources indicated that discussions between both the sides so far have been the most detailed and WTO compliant compared to many other countries. Earlier, it was indicated by sources that both the sides had converged on most of the issues, on most of the trade issues, and were very close to a deal. So it remains to be seen how early both the sides are going to conclude all pending issues, even as last month CNBC TV18 had reported that technical discussions were underway on issues like non-tariff barriers, which were being discussed between India and the United States. Several issues have already been threshed out as per sources, and all eyes, of course, would be on what is going to be the US response on the negotiations which have taken place so far.
Abhimanyu, thank you for that update. Moving to the poll-bound state of Bihar, where the pollsters have given the ruling NDA the edge over the Mahagathbandhan, while Metrise gives NDA 147 to 167 seats. JVC and People's Insights pegs NDA's seat tally to be between 133 to 150. The RJD-led Mahagathbandhan is expected to win between 70 to 102 seats, well short of the 122 majority mark in the 243-member assembly. Other pollsters such as Chanakya Strategies, Dainik Bhaskar and People's Pulse gives the NDA a clear majority while limiting the Mahagathbandhan to less than 100 seats. Only Chanakya Strategies gives the opposition about 100 to 108 seats in the assembly. The counting of votes in Bihar will take place on Friday, the 14th of November. On to the latest in the Delhi car blast case now. The NIA has set up a special 10-member team which will coordinate with the Jammu and Kashmir, Delhi and Haryana police to review case files connected to the Jaish-e-Mohammed. This comes after the Home Ministry transferred the Red Fort car blast case to the NIA. Meanwhile, a high-level meeting between the NIA Director General and the IB chief is currently underway. Prime Minister Narendra Modi will also hold the meeting with the Cabinet Committee of Security at about 5 p.m. later this evening. At least 12 people were killed and several injured after a powerful car explosion ripped through Delhi's Red Fort area on Monday. CNBC TV18 learns from sources that the suspect may have acted out of panic and desperation due to the raids carried out by the security agencies. Sources say that the bomb was premature and not fully developed, thus limiting the impact. We'll take a short break. More news and updates on the other side. Welcome back, bringing you the latest now from the ongoing drama within the Tata Trust, which has named Neville Tata and Bhaskar Bhatt as the new trustees. They have been inducted to the board of the trustees of Sir Dorabji Tata Trust for a period of 3 years. Meanwhile, Venu Srinivasan has also been appointed as trustee and vice chairman for 3 years. Srinivasan's lifetime tenure has been revised following a new Maharashtra government rule limiting the number of lifetime trustees. Mangalam is now here to tell us more about the 32-year-old Neville Tata.
The Tata legacy has turned a page. The new generation has stepped onto one of the most powerful boardrooms of India, the Tata Trust. 32-year-old Neville Tata, who's the son of Tata Trust chairman Noel Tata and Alu Mistry, has been appointed as the trustee of the Sir Dorabji Tata Trust, effective November 12th. His appointment marks a generational shift in the trust that controls 28% of Tata Sons, the holding company of the Tata Group. Born into one of India's most respected business families, Neville represents the next wave of Tata leadership. He's the grandson of Simon Tata and the grandnephew of Ratan Tata. Educated at the Bayes Business School in London, Neville holds a degree in business management, bringing with him an international perspective and a modern retail sensibility. He began his career with Trent Limited, the Tata Group's retail arm, in 2016. Over the years, he's worked across Trent's businesses from packaged food and beverages to leading Star Bazaar, the group's grocery retail venture. He's also played a key role in the success of Zudio, which is the fast-growing value retail chain that has become one of India's most talked about retail stores and added a lot of value to Trent as well. Joining Neville as a new trustee is Bhaskar Bhatt, the former managing director of Titan, who steered the company through a golden era of retail expansion between 2002 and 2019. The trust has also reappointed TVS Motor Company chairman Venu Srinivasan as vice chairman for a 3-year term after revising its structure to comply with the new regulatory norms that cap the number of permanent trustees at 1/4 of a public charity's board strength. Following this change, Noel Tata now remains the only permanent trustee of the Sir Dorabji Tata Trust. The other trustees include Vijay Singh, Pramit Jhaveri and Darius Khambata. Together with the Sir Ratan Tata Trust and the Sir Dorabji Tata Trust, they hold a combined 66% stake in Tata Sons, giving it a commanding influence over the Tata Group's holding company. With Neville Tata's induction, the trust signals continuity with change, strengthening governance while bringing in the next generation of Tata leadership, from Jamshedji to JRD, from Ratan to Noel, and now Neville Tata. The Tata story enters its next chapter.
And watchers of this could only hope that the story is as glorious as the previous chapters have been. Mangalam, thank you for that update. We take your leave on this edition of Business Lunch. We leave you with the markets at the highest point of the day. Midcap Radar on the other side. Stay tuned.